Yes, people, a very, very happy evening to all of you. Thank you so much. So, guys, we're doing this chapter called as Framework for Preparation and Presentation of Financial Statement. Okay. In the morning session, what did we learn? We studied what is the fundamental accounting assumptions that we follow while preparing the financial statement. What is it? Going concern, accrual, consistency. How do you remember this? CAG. C for consistency, A for accrual, G for going concern. CAG. You know what is CAG? Comptroller and Auditor General. So CAG. Remember that? That we'll remember. Okay, wow. Today morning we learned how to prepare the financial statement under non-going concern basis. Non-going concern basis. Correct? Okay. After that, what did we see? What are the 4 qualitative characteristics of financial statement? What is it? Understandability, reliability, relevance, comparability. This much we saw. Now I have 2 more concepts to discuss. One is the method of maintaining capital, that is method of capital maintenance. And second, whatever the elements of the financial statement are there, no, how do we measure them? That we have to discuss. If I discuss these 2 concepts, means we are done with the chapter. Am I loud and clear? Am I loud and clear? Say yes. Fantastic. So now, before I start discussing this topic called method of maintaining capital maintenance, I want to do a small recap of a concept that we studied in CA Foundation as well as in 11th standard. This is a revision from a chapter named Accounting from Incomplete Records. We'll do a very quick recap. Without that, this concept cannot be understood. Now, tell me something, people. Mr. X is a trader who started business last year. The business is continuing in the current year. In the beginning of the year, he had an opening capital of 10 lakh rupees. Any problem? By the time he came to the end of the year, this is 1/4/22. By the time he came to the end of the year, 1/4/23, sorry, 31/3/23, his capital grew up to 12 lakh rupees. In between, there is no additional capital. There is no drawing against capital, right? So from 10 lakh, all the way the capital has increased to 12 lakh rupees. Can you please tell me, what is the reason behind increase in capital? During this period, the business has made a profit of 2 lakh rupees. And we know that profits are always added to the capital. Profits are added to the capital. So can I say opening capital plus profits is equal to closing capital? Opening capital 10 lakh plus profit 2 lakh. Closing capital 12 lakh. Any difficulty? No difficulty. Imagine in between this, somewhere in middle of the year, 3 lakh rupees additional capital is included, which means capital will increase. To increase capital, what am I supposed to do? Add. So with the opening capital, can I do add additional capital? Yes. How much I said? 3 lakh. Now tell me, what is the revised closing capital? 15 lakh. So if I ask you what is the formula for closing capital, now what will you say? Opening capital plus additional capital plus profit. This amount, this much money we have to pay to the owner today if we are closing the business. If today we are closing the business, means this much is the liability that we owe towards the owner. Yes or no? Yes or no? Okay. If today business is shutting down, I have to pay him the opening capital plus additional capital, profit, all put together. We have to give him 15 lakh rupees. Got it? Not got it? By chance, out of this 15 lakh rupees, somewhere here, if the partner is already withdrawn, 1 lakh rupees, will you still give him 15 lakh? No. Will you still give him 15 lakh? No. So if any drawings is done, what do we do? That drawings we reduce from the balance. So from here, if I minus drawing against capital, 1 lakh rupees, do you have any problem? So what is my revised capital that I have to pay him back? 14 lakh. So what is meant by closing capital? What is meant by closing capital? Closing capital is the final capital, final liability towards the owner. Final liability towards the owner at the end of the year. Got it? Not got it? Clear or not clear? Okay. In this, if I ask you to calculate the profit, can you calculate the profit? Equation is what? Opening capital plus additional capital plus profit minus drawing against capital is equal to closing capital. In this equation, is there anything to memorize? Is this formula supposed to be memorized, or it is there in your blood? Is there in your blood, vein, capillaries, whatever you say? Since 11th we are studying this. Harini, yes or no? Yes. If I ask you to calculate profit, can you redefine this equation? If I want to calculate profit, can you redefine this equation? Profit is equal to same closing capital first, and have to keep it. Equal to closing capital. That's first item. Now go back in the same order. This minus drawing against capital, I will take to other side. So minus drawing against capital, when it goes to other side of equal, it becomes plus drawing against capital. So plus drawing against capital. Any problem? No problem. Plus additional capital, from here when it goes to other side, it becomes minus additional capital. And this opening capital, plus minus nothing is given. So what do we assume? It is plus opening capital. Plus opening capital, when it goes to other side of equal to, plus becomes minus. Minus opening capital. We will get profit and loss. If the answer is positive, apnina, profit. Negative means loss. Positive means profit. Negative means loss. Can I write down in statement format? Statement format, how do we write? Closing capital. From that, or with that, we are adding drawing against capital. Adding drawing against capital means what? The drawing against capital, what is subtracted, to cancel the effect of this, we are adding. So which means addition of drawing against capital is nothing but cancellation of drawing against capital. We are removing the term drawing against capital. Additional capital, when you added. To remove the effect of this additional capital, what are we doing? Minus again. So if I do minus additional capital, we will get this as adjusted closing capital. What is adjusted closing capital? From this closing capital, we have removed the effect of drawing against capital and additional capital to get the pure closing capital. This is closing capital without drawings and additional capital. Got it? Not got it? Okay. Now, between this adjusted closing capital and opening capital, only one item should be there. Who's that? Profit. So from this closing capital, if I minus opening capital, from this closing capital, if I minus opening capital, we will get profit. We will get profit. Any difficulty in this? We will get profit. In this equation, have you understood it logically? There's no need to by heart. This statement format is logically understood. No need to by heart. This is what we have discussed in depth in CA Foundation. Prior to that, we have discussed in 11 CBSE. Yes or no? Same data I've discussed here. As a recap, if this is clear, I would like to go to the topic which is applicable at the intermediate level. Got it? Not got it? Okay. Now, this topic is little deviated or different from the framework model. Got it? This is a little bit different and unique, though they have given under this chapter, but this is a little different from the framework model. This was not a part of a framework. It's something different, but included in the framework chapter. They're telling there are some methods for financial capital maintenance. Capital maintenance. Forget the term financial. Capital maintenance are they talking about? What are they talking about? Capital maintenance. For this, they have come out with 3 methods. First method is financial capital maintenance. That is capital maintenance at historical cost. What is it called as? Capital maintenance at historical cost. Second, capital maintenance at current purchasing power. In the name pathal anaponda mar method sending short and sweet 1 or 2 words irukum. Inga statement mari podu. So people get, first in one go, they feel, what are they trying to talk about? It's very simple. It's very logical. But there should be somebody to make you understand this properly. Third is physical capital maintenance. Physical capital maintenance. Can we revise the name one more time? What is the first method? Capital maintenance at historical cost. Capital maintenance at historical cost. Capital maintenance at historical cost. First method. Next, same capital maintenance, but at current purchasing power. Current purchasing power. Third is physical capital maintenance. Physical capital maintenance. Got it? Not got it? Okay. Now, I'll take one example to make you understand. Then I'll come back to theory and discussions. An entity commenced business on 1st April 2025. with rupees 1,20,000. What is this 1,20,000 then? Initial capital. What is it called as? Initial capital. Got it, not got it? He is starting the business with this amount apnina. This is the initial capital contributed by him to start the business. Yes or no? Yes. Online people, please switch on your videos. Srinanda, Harita, Abhinaya, Inya, all of you, please. This 120 was deployed in purchasing 6,000 chocolates of rupees 20 per chocolate. So who's doing this business? Who's doing this business? Nah, chocolate na nada. Lakshita is like from her face itself. Chocolate nale Pratik sir da apninte. So 6,000 chocolates. So I'm the trader. I have purchased 6,000 chocolates as 20 per piece. How much is the total money invested? 120. So full 120 I invested in buying the chocolates. Yes or no? Who am I? I'm a chocolate trader. I didn't buy for eating. I bought it for selling purpose. During the year 25-26, the entity sold these chocolates at 30 per piece. Oh my God. So what is profit per piece? What is profit per piece? Selling price 30, cost price 20. 30 minus 20, profit is 10 per piece. All the chocolates sold, entity sold these chocolates, means all of these chocolates. So what is the overall profit? 6,000 chocolate into 10 rupees profit per piece. So what is my overall profit? 60,000 is profit. Okay, not okay? Okay. Now what is the question asking? Question is asking you to calculate the maximum drawings, also called as retained profit, that the entity can withdraw in order to maintain the same opening capital. To maintain the same opening capital, what is the maximum amount of profit that we can withdraw? Okay, wow. Okay. I've given two cases, case 1 and case 2. How many cases? Two cases, case 1 and case 2. In case 2, we have 3 cases. Oh my God. In case 2, we have 3 cases. So in total, how many cases? Who said 5? Total 4 cases only. Case 1, 1 case. Case 2, 3 cases. 4 cases. Mathematics is clear? Okay. Now, case 1, no drawings made during the year. Case 1, no drawings made during the year. Okay, wow. Now listen to very carefully. I'm drawing the diagram here. Now we'll understand and appreciate why I discussed the basics before. In the beginning of the year, what is the total capital with which we started the business? 1,20,000. We may call this as initial capital or we may call this as opening capital. Doesn't matter. Both are same. Initial capital capital contributed for the very first time. Opening subsequent capital is called as opening capital in the beginning of the year. Okay, wow. Okay. Throughout the year, business has been done. What is the profit that has been earned? What is the profit that has been earned? So 6,000 chocolates we sold, sir. Profit for each chocolate is 10 rupee. How do we get this 10 rupee? 30 minus 20. 30 is what? Selling price. 20 is purchase. Selling price minus cost price is profit. Got it? Sherry. 60,000 is the profit. 60,000 is profit. Can you please tell me what is the total closing capital at the end of the year? 1,80,000 is closing capital. Any difficulty?
No.
Anywhere in the question have they mentioned that additional capital has been contributed? No. Anywhere have they told any money has been withdrawn? No. So this is my closing capital. Got it, not got it? Got it, not got it? So what is the question asking? Question is asking, what is the maximum profit can be withdrawn? How much money I can withdraw from the business in such a way that when I start the business next year, I should be able to start with the same capital. Which capital? Same old opening capital. அப்ப இங்க 120 ஓட நான் ஸ்டார்ட் பண்ண அப்படின்னா how much money I can withdraw? How much money can I withdraw? So how do you calculate it? Sir, closing capital is 180. Next year beginning, what amount I want? 120. So how much extra I have? 60. That I can withdraw. If I withdraw that அப்படின்னா the balance capital become 120. Got it, not got it? So from the closing capital of 1,80,000 rupees, if I minus opening capital, what will I get? Profit to be withdrawn. From closing, if I minus profit, I'll get the opening capital. Yes or no? You said ulta. So from 180, if I minus 60,000 rupees, I'll get opening capital. But what I'm asking, how much profit can I withdraw to maintain the same capital? So 180 is my closing capital. How much opening capital you want to maintain next year? 120 if I have to maintain apnina. How much money can I withdraw? 60,000. This 60,000 is called as maximum amount of profit which can be withdrawn. What is the maximum amount of profit that can be withdrawn? Okay, not okay. So this particular gentleman, what he's doing, in the beginning of the year, he will buy 6,000 chocolates for 1,20,000 rupees. Syria, the same process is repeating every year. 1,20,000 worth of chocolate is buying. He's selling all of them at a profit of 60,000. At the end of the year, what is happening? Same closing capital, 180. 60,000 profit, 180. He's repeating the process again and again. After that, what is happening? Again, to maintain the opening capital, from this 180, what will he do? He'll withdraw the profit and take home. Because at home also you have to show, no boss. We've done the business, we've earned the profit, this much is profit. You have to show at home also, no boss. இல்லை வீட்டில் கேட்பாங்களே நீ 2 வருஷம் பிசினஸ் பண்ண என்ன பண்ணேன்னு கேட்பாங்க. அப்ப you have to show, no, I've got 60,000 profit அப்படின்னு சொல்லி காமிக்கணும்ல. So this gentleman buy the product at 120, earn 60,000 profit, closing capital becomes 180. Again from that 60,000 he'll withdraw. Next year he'll continue same process. 120 ka opening capital, with that he'll buy chocolates, earn profit, withdraw that profit. Same thing will continue. Yes or no? Yes or no? This is first concept. What is first concept? First concept is capital maintenance at historical cost. Capital maintenance at historical cost means what? With what I started, with what capital I started, the same capital I'm maintaining. Same capital I'm maintaining every year. Which means whatever the profit is earned, the profit fully is withdrawn. Got it? Not got it? Okay. Sir, idhula maja didn't come, sir. Can you make this a little bit more complex? For that, I prepared case 2. Case 2 is a scenario which says that 30,000 drawings withdrawn. If 30,000 money is withdrawn in the middle of the year, then how much is the balance profit that can be withdrawn? Don't answer. Let me complete. In case 2, second scenario, what if he has already withdrawn 60,000 rupees? Is there any further money that he can withdraw? Case 3, what if he has withdrawn 70,000 rupees? Can he withdraw further money? No. So like that, 3 cases I've built. Paklama. Okay. Before that, I'll show the solution that I've done for case 1. In case 1, the first step that I've calculated is working note number 1, calculation of profit. How to calculate the profit? Whatever the quantity is sold, multiplied by profit per piece. How many quantities we've sold? 6,000. Profit per piece is 10 rupees. 60,000 is profit. Working note 2, what did I calculate? Calculation of closing capital. Calculation of closing capital. How do we calculate closing capital? With opening capital, we add additional capital, add profit, minus drawings. I'll get closing capital. Now you understood in beginning why I took that revision. So because I wanted to give that equation in your mind so that whenever we calculate closing capital, without any difficulty, you should be able to calculate. Yes or no? Okay. So closing capital is opening capital plus additional capital plus profit minus drawings. In this additional capital is 0, drawings is 0. So what is my closing capital? It's a sum total of opening capital and profit, which is 180. Yes or no? Yes or no? Okay. Now, what are they asking? Calculate the maximum amount of capital which can be withdrawn. So, current closing capital is 180. In owner's hands, how much money is there in the business at the end of the year? 180. In the beginning of the next year, how much opening capital he wants? This opening capital is not the opening capital of the current year. This is the opening capital required for the next year. So, how much is opening capital required for the next year? 120. 120 is required, but how much I have? 180. So, from 180, if I minus what I want, balance is that money which I don't want. The money which I don't want is can be withdrawn. The money which I don't want can be withdrawn. Got it? Not got it? One more time, sir. 1,80,000 is money totally in hand. Jui, yes or no? 180 is the total money in hand. In the start of the next year, how much money should be there in my hand? 120. How much is currently there in my hand? 180. How much extra is there? 60,000. That is the maximum amount that I can withdraw at the end of the year. Got it? Not got it? This way, I'll maintain my opening capital 120 in the next year. How much money should I withdraw in such a way that the opening capital in the first year is maintained in every second, third, and fourth year? Got it? Not got it? Clear or not clear? Okay. Case 2. Tell me one thing. In case 2, will closing capital remain same or will it change? Okay, before that, profit will it be same or change? Case 2 la profit maruma marada? மாறும். வெரி குட். எப்படி மாறும்? அதே 6,000 சாக்லேட், அதே ப்ராஃபிட் 10 ரூபா ஒரு பீஸ், எப்படி மாறும்? கரெக்ட்? நோ, ப்ராஃபிட் will not change. Profit will not change. Now my second question is, will closing capital change? Will closing capital change?
Depends on the
Do your loss today. Will closing capital change? Donkey fellow, closing capital change, no. With opening capital, I will add profit, drawings will minus, no. So one time if I minus drawings அப்படினா closing capital will change. அப்போ உனக்கு வந்து அந்த that is when I asked that question, if you're not able to analytically think means either you're not having presence of mind or common sense. One of the two is missing. Both are negative for you. Donkey fellow. Drawings if I minus capital will change, no boss. Thank you. Closing capital when drawings is 30,000. How do I get this 150? Sir, opening capital 120. Profit 60,000. Minus drawings. What is it? 30,000. How much it is? 150. Any difficulty? No difficulty. In second case, when the drawings is 60,000, what is the calculation? Opening capital 120 plus profit 60,000 minus drawings 60,000. So what is my capital in hand right now? 120. Opening capital 120, profit 60 minus 70,000 drawings. What is my closing capital? 110. So when drawings changes, my closing capital also will change. Got it? Not got it? Okay. Same requirement. What is the maximum amount of profit that can be withdrawn? What is the maximum amount of profit that can be withdrawn from the business? Paklama. Now, we started with 1,20,000 opening capital. At the end, it is, sorry, in case 1, that is case 2, the first scenario is 150. Yes or no? Now, closing capital is 150. Okay, wow. How much is the opening capital required in the beginning of the next year? They're telling that same opening capital to be maintained. Same opening capital to be maintained. So what is opening capital required to be maintained? 120. This 120 opening capital to be maintained is called as historical cost. What is it called as? Historical cost. Means what? At what price I started the business with, the same capital is continued. That is called as historical cost. Got it? Not got it? When I started this business with what capital I started with, that initial transaction value is called as historical cost. Clear or not clear? Okay. So here 120 if I have to maintain means how much money I can withdraw now? 30,000. So with this, if I minus opening capital, minus 1,20,000, 30,000 is the maximum amount of profit that can be withdrawn. Yes or no? Maximum allowed drawings, retained profit is 30,000. Another name for maximum allowed drawings is retained profit. The profit which is now actually retained in the business. If a business you've not withdrawn, no. Now only you'll withdraw. So where the profit is in the business, retained in the business, hence it is called as retained profits. The profit which is retained in the business as of now. Withdraw panikalam. Okay, not okay. Okay. This is called as closing capital at the historical cost and opening capital at the historical cost. Got it, not got it? Now you'll understand the significance of this word when I do method 2 and method 3. அப்போதான் இதோட அருமை என்னங்கிறது புரியும். இன்னைக்கு ஒன்றும் புரியாது. Got it, not got it? Clear or not clear? Okay. What ma? Now coming to next scenario, case 2, second scenario. What is my closing capital? What is my closing capital? 120 is a closing capital. In hand, how much do I have? 1,20,000. What is the opening capital required to be maintained in the beginning of the next year? 120. So is there anything that I can withdraw? No. Already you have withdrawn the money. Already you have withdrawn the money. Already you have withdrawn the money. Got it, not got it? Okay. Case 3. Sorry, case 2, third scenario. How much is my closing capital? 110 is the closing capital. What is the money required in the start of the next year? 120. Oh my God. You have excessively withdrawn the money from the business. Please tell me, in any business, if you have more the capital, is it better or not? An organization, whether it is strong or not, a business entity, whether it is strong or not, you can evaluate from multiple factors. In that, one such factor is the factor of capital. In any business, if capital invested is huge from the owner side, we consider that one of the strongest business entity. We will consider that as strongest business entity. Because more capital will give opportunity to buy more product and sell more product and earn more profits. இப்போ சும்மா யோசிச்சு பாருங்களேன். I only have 1,10,000 in my hand. With this 1,10,000 rupees, how many chocolates can I buy keeping the same cost price? What is the purchase cost of the chocolate? 20 rupees. If I divide by 20 means how many chocolates can I get? How much? 5,500 chocolates only I can buy. If I can buy only 5,500 chocolates means how much can I sell? 5,500 chocolates only. If profit is still 10 rupees per chocolate means what is the profit for the entire year? 55,000. So where in previous year you earned 60,000 profit because of your foolishness, because of your greed of withdrawing the profit, next year you'll end up only making a profit of 55,000. Like that, if you keep on withdrawing the capital from the business one fine day, you will not have sufficient money to do the purchase of the goods. So today the company which is having a great capital and great profit, in the near future it will be sunk inside. Got it, not got it. So don't you think it is very important for us to have a proper capital maintained in the beginning of the financial year? So this concept is making us realize what is the importance of having the capital to be maintained throughout the year. To start the business, what capital you had, no? You need to continue the same capital or probably invest more capital to grow the business. Got it, not got it. So this concept is making us realize what is the importance of maintaining the capital. Adikam per endu maintenance of capital. If you withdraw too much capital, then the business will not have sufficient money to grow the business. Hence, a profit-making company very soon can become a loss-making company. Got it, not got it. So here, same thing happened, no? Previous year 60,000 profit, but because of lack of capital, next year ka profit is going to be 55,000. And if this gentleman continuously keeps on withdrawing the capital like this, one fine day will come where he has to shut down his business. So this is teaching us the importance of maintaining the capital. This is a concept which says that historical cost of the opening capital has to be maintained. Means what? At least with what capital you started business, no? At least that you maintain. So at any point of time, if you feel like withdrawing the money abdina, do not withdraw more than the opening capital. Adada ni minimum maintain pannungiradhu. It is making us realize this concept. Okay, not okay. So here, in the third scenario, 1,10,000 is closing capital. But what is opening capital required in the beginning of next year? 1,20,000. So how much extra capital we have withdrawn? 10,000 rupees. So it is going in negative. So going in negative is good or bad? Bad. Now come back here. A scenario. When the retained profit is zero. It means profit cannot be withdrawn any further. Already you withdrawn the money. Whatever you earned, everything is withdrawn. Idhuk mele edhum withdraw panna mudiyadhu. If retained profit is positive means this much profit can be further withdrawn. It can be further withdrawn. If retained profit is negative means excessive withdrawal of profit, including original capital. So you've not only withdrawn profit, boss, you've withdrawn the original capital. So from here, the downfall of this company will begin. Okay, not okay. Now, whatever we did in method 1, what is method 1? Historical cost. Adadu, maintaining the capital. Which capital? Financial capital is maintained under historical cost. Okay, va. I'll just read it. Under this method, the opening and the closing asset are stated at the respective historical cost to ascertain the opening and closing equity. I'll come back to this little later. Now, whatever we did this, are you okay with this? When the business was started, you started with a capital of 120. Correct? 120 start panni. What is the purchase price per product? 20 rupees. Will it be like that every year you buy the chocolates will be same 20? Who will consider inflation? Inflation is coming now. For example, today if any, let's say BCom graduate after completing BCom goes for a job, what is the salary that he can expect as a fresher? 15,000. Okay, let's keep 15,000. Now ask your father, when he completed BCom, at that point of time, as a fresher, how much they paid? They paid 5,000 that time. Now it is 15,000. I'm getting 15,000. Can you feel happy about it? Can you feel happy about it? That time when 5,000 rupees was his earning, his expenses was 2,000. How much was his expenses? 2,000. So what is the expense percentage? 2,000 upon 5,000. எவ்வளோ percent செலவு பண்ணாங்க? 40% of the money they spent. How much was they saving? 60%. Now 15,000 rupees you earn, no? In that you have to spend actually more only, but for your safety side I'm telling 14,000 you're spending. Okay va? இன்னைக்கு இருக்க விலைவாசி அப்படி. Today the cost of living is that high. How much money are you spending? 14,000 upon 15,000 into 100. How much it is? 93% money you are saving. In that, what happy you are being? Oh, dad, you earn 5,000 per month. I'm earning 15,000 per month. Look at the cost of inflation, boss. Look at how the expenses have increased over the years. Got it, not got it. Got it, not got it. Similarly, this gentleman who is so conveniently telling, no, I want to maintain same capital every year. Means what? I started with the 120 in the business. Closing was 180, 60 profit I'll withdraw. Next year with same 120, I'll buy again the chocolates. 60 profit I'll make. 180 is the closing capital. 60 profit in that I'll withdraw. How much is opening capital? 120. He's continuing same process. Is it realistic?
No.
At some point, he will not be able to buy the same amount of chocolate with 120. When inflation will come into picture, the products ka price will go up. Now, where he was able to buy the chocolate for 20 rupees after 2, 3, 4 years, the same chocolate he can buy for 25 rupees. Yes or no? Kit Kat chocolate. Kit Kat. Correct, no? You see, from here 6, 7, 8, 10 years ago, for 10 rupee Kit Kat chocolate, it will be this big. Now, same 10 rupee Kit Kat chocolate has become this big. Correct, huh? Why? Why? Because expensive. Things have become very expensive. Raw materials, everything has become very expensive. So in that 10 rupee, same quantity of chocolates we cannot give. So quantity is now reduced to almost half. Almost half. Pooja, yes or no? Yes, no? Okay. So in the historical cost method, what is not considered? Inflation is not considered. Inflation is not being considered. Got it, not got it?
Yes.
Now, your father is asking, donkey fellow, you are telling 120 ka opening capital you put in the business. You started business with 120 capital. 180 is the closing capital. 60 ka profit you made. In that 60 you withdrew. Now today, price per chocolate is 25 rupees. 25 rupees. How many rupees? 25 rupees. So 1,20,000 divided by 25 rupees means what is the number of chocolates that you can buy?
4,800.
4,800 chocolates only you can buy. Yes or no? Imagine selling price also increased. 35 rupees is selling price. What is profit per unit? 10 rupees. 10 rupees into 10 rupees means how much is your profit? 48,000. Apana, your profit is increasing or reducing? Your profit is reducing. To earn same amount of profit like last time, if I have to earn the same amount of profit means I have to buy more chocolates. Now, to buy more chocolates, I need to invest more capital. But where is capital? You have withdrawn full 60,000 here, no boss. So this opening capital is not sufficient to earn the same amount of profit that you were earning in the earlier period, because inflation has made things expensive. So your profit will come down. So like this, without considering inflation effect, if you keep on withdrawing the profit from the business, if you do not maintain your capital sufficiently to cope up with the inflation, நீ inflation cope up பண்ற வரைக்கும் கூட capital நீ வந்து enhance பண்ணல அப்படின்னா, one point of time your profit will fall down. Fall down. So this concept is making us understand how to maintain the capital in such a way that the profit what we earned in the past should not fall down. It should not fall down. At least same should be maintained, or we have to increase. Got it, not got it? Clear or not clear? Hence, we go to method 2. In method 2, what is called as you're maintaining the capital in such a way that you will be able to manage your current purchasing power. My current purchasing power is very weak or strong here. In this question, my current purchasing power is weak or strong? It is weak. With this 120, earlier you were buying 6,000 chocolates. Now with the same 120, how much chocolates are you able to buy now? Only 4,800. Your purchasing power is increased or decreased? decreased. Now to maintain the same power, if I have to buy same chocolates, if I have to maintain the same purchasing power, how much money should I have in hand? How much money should I have in hand? That is what we are going to calculate. Now, how to calculate? Listen to me very carefully. It's mathematics. Nothing to do with accounting. Nothing to do with accounting. This is pure common sense and mathematics. Listen to me very carefully. I'm taking to you closing, case number, not case number. Example, next example of next method. Same question, people, no change. An entity commenced a business on 1st April 25 with 120 as capital. With this capital, we purchased 6,000 chocolate at 20 per piece. During the 25-26, entity sold this chocolate for 30 rupees per chocolate. So what is profit per chocolate? 10. What is total profit? 60,000. Same, calculate the maximum drawings. Case 1. The average inflation indices at the beginning and at the end of the year is 100 and 120 respectively. Got it, not got it? When you were buying the chocolate at 20 rupees per piece, Apnina, at that point of time, the inflation was 100 points. Inflation was 100 points. But today, after 25-26, in 26-27, when you're going to buy the chocolates from market, no, inflation is increased by 20 points. Inflation is increased by 20 points. Got it, not got it? Now, this is 25-26. This is 26-27. In 25-26, business is over. In 25-26, you started business with how much capital, Lakshita? No sleeping. How much money with which you started? 1,20,000. In this, how many chocolates you would purchase? 6,000. Throughout the year, what is the profit that you earned? 60,000. What is the capital at the end of the year? 180. Got it, not got it? In this year, what was the inflation index number? It was 100 points. Means at the rate of 20 rupees per chocolate, the inflation index was 100 points. Now you're going to do the business next year, 26-27. Inflation index is 120 points, which means you cannot buy same 6,000 chocolates at 20 rupees per chocolate. Now inflation is come into picture. Can you please tell me what is a revised chocolate price? How to calculate, sir? Very simple. Yes, vegetable vendor technique, rightly said. When the inflation index was 100 points, chocolate ka price per piece was 20. Now when it is 120, what is the corresponding chocolate price? Cross multiply. 24 rupees is the chocolate price. Got it, not got it? Got it, not got it? Okay. So here, if I have to buy 6,000 chocolate means, how much money do I need? 6,000 into 24. 6,000 into 24. So how much do I need? How much opening capital do I need to start next year ka business? 1,44,000. Got it, not got it? How much money is there in my hand in the previous date? 180. How much money I need on the next date? 144. Difference, I can withdraw the money. This much money I can withdraw. In the first method, what happened? You maintain the same original capital at the historical cost. Historical cost means what? The capital with which you started, no, same capital you maintain. So in that, what did you not consider? Inflation was not considered. Inflation was not considered. But today, inflation is coming into picture. To buy the same quantity of chocolates, you have to increase your opening capital. So can you withdraw 60,000 full profit? No. So how much profit can you withdraw? 36,000 profit only you can withdraw. Considering inflation, you cannot withdraw entire profit. This is the actual profit that you've earned. So if father asks, what is the profit that you've made, Apnina, which can be withdrawn, Apnina? You can only say 36,000 profit is earned for withdrawal purpose. Got it, not got it? The remaining is how much? 24,000. Huh? So 24,000 profit what you earned is profit only. But that profit you cannot enjoy because that has been eaten away by the inflation. Inflation is eaten away that profits in the business. So the remaining profit which you can actually enjoy is worth how much? 36,000 rupees. Got it, not got it? Okay. Now, sir, how do we do this in the exam, sir? One second, I'm coming. Closing capital. How much is closing capital? Sir, we'll calculate, sir. What is the formula for closing capital? Opening capital plus additional capital plus profit minus drawings. How much it is? 1,80,000. Any problem? From closing capital, I should minus opening capital. Now, in method 1, we took opening capital. Which opening capital? At the historical cost. I wanted the opening capital of next year. In next year, we took historical cost in the method 1. Now we have to take indexed capital. Which capital? Indexed capital, which is the realistic opening capital. At present opening capital. So this opening capital is not at the historical cost. This is indexed. This is indexed with inflation. Got it? Not got it? So how do I do this? How do I do this? Either you can follow this method. What I said, this method can be followed. Or one more shortcut. Tell me one thing. What is the opening capital when the inflation index was 100 points? When the inflation index was 100 point, what was the opening capital? Opening capital was 1,20,000 rupees when the inflation index was 100. When inflation index was 100, opening capital is 1,20,000. Now what is the inflation index? 120 is inflation index. What is my proportionate opening capital supposed to be? Cross multiply. Same 1,44,000 you'll get. So there I did indexation on the purchase price of the product. Here I did the indexation on the opening capital because here we're trying to maintain the capital, boss. What are we trying to do? We're trying to maintain the capital. So will I do indexation on the product value or should I do on the opening capital? We'll do on the opening capital. Got it? Not got it? Got it? Not got it? That year, when we started the business with 120 capital, my inflation index point was 100 points. Now inflation is increased. So therefore, in order to maintain the same profitability, I need to increase my further opening capital. Got it? Not got it? So now please tell me, 180 is the money in my pocket. 180 is money in my pocket. How much money I need next day? 31st March, 31st March, this much money is there. How much money I need in the next day, 1 April? When I'm talking about 31st March, I'm talking 31st March of previous year. 1st April means I'm not talking about the beginning of the previous year. I'm talking about the beginning of the next year. In the beginning of the next year, to start the business and to maintain the same profit, how much capital is required? 1,44,000. So how much is the surplus profit? 36,000. This is the maximum amount of profit that you can withdraw from the business. This is called as retained profit. What is it called as? Retained profit. The profit which is retained in the business. So what happened to remaining 24,000? That profit is not retained in the business. It is invested in the opening capital. It is not retained. It is invested in the opening capital. Got it? Not got it? Any difficulty?
Profit share will be 1,000 into 636.
Correct. No, you can't say that way. You can't say that way. 6 rupees profit. How did it drop? Selling price is 35. Cost is 25. How the profit will drop? The profit remains the same.
This case
No, selling price. See, definitely selling price proportionately will increase. Selling price proportionately will increase. Next year, the selling price can be 30. It can be 31. It can be 32. It can be 33. I don't know what is the selling price. See, my intention here is not to maintain the same profit. My intention is to maintain the same capital. So I'm not bothered about the profitability. See, profit in the business can vary. It has got number of reasons why it varies. What are the reasons? What could be other reasons? If the selling price does not increase, if MRP remains same, what will you do? So here, this concept is not trying to make us understand the importance of maintaining the profit. We see as a business, do we want to maintain the same profit every year or grow the profit? Grow the profit. So this concept is not teaching us the maintenance of the profit. This concept is teaching us the maintenance of the capital. Maintenance of the capital in such a way that even during the inflation period, I can have the same purchasing power. Got it? Not got it? So this is talking about the maintenance of the capital, not maintenance of the profit. So don't get inside the profit part. Got it? Not got it? Clear or not clear? Okay. So same step, calculation of profit. Same step, calculation of profit. Same step, calculation of closing capital. Any difficulty? No difficulty. Now when the inflation indices was 100 and 120, the maximum allowed of drawings is 36,000 rupees. Got it? Not got it? Clear or not clear? Okay. Now I have case 2. What is case 2? When your inflation indices is 100 and 120, 100 in the current year, 180 in the upcoming year, that is subsequent year. Now we have to see whether do we have sufficient capital maintained in the business or not. Sir, how do we do this, sir? Very simple. First, always closing capital. What is closing capital? What is closing capital? The same we have to calculate opening capital plus additional capital plus profit minus drawings. How much it is? 1,80,000. Apana, this much capital is there in your pocket. In the business, this much capital is there in your pocket. Yes or no? Yes. This is on 31st March of the previous year. I want on 1 April of the next year, how much should be the opening capital considering the inflation? Considering the inflation. This opening capital is called as indexed opening capital. What is it called as? Indexed opening capital. Now, when the opening capital was, when the indices point was 100, inflation point was 100, what is my opening capital? 1,20,000. Now my inflation indices is how much? 180. How much should be my proportionate opening capital to run the business? 2,16,000. Oh my God. I need a minimum of 2,60,000 opening capital in the next year to maintain the same level of profit. But how much money is there in hand? 1,80,000, which means whatever the business has been done in the current year, no, the profit margin that you have set in the current year, the expenses that you have incurred in the current year is not done properly. You have not done the business properly. நீ இன்ஃப்ளேஷன் கன்சிடர் பண்ணாம உன் ப்ராஃபிட்டபிலிட்டியை ரன் பண்ணிருக்க, பிசினஸ் ரன் பண்ணிருக்க, ப்ராஃபிட் earn பண்ணிருக்க. So this gentleman, even though you're telling that one side 60,000 profit is earned, has he actually earned anything?
No.
Because of inflation, this entire profit has been gulped down. Inflation has eaten away the entire profit. Inflation is eaten away the entire profit. And on top of that, how much money we need further? 36,000 money is needed. So from where will you get? From whom will you get the extra money? From whom will you get this extra money? அதுக்கு பேசாம நீ ஜாப் பண்ணிருக்கலாம்ல. This gentleman with Bandai went from home telling that, oh no, I'll take 120 ka capital, I'll buy chocolates, I'll sell chocolates, I'll make profit. You made 60,000 profit. You came at home shouting, telling, hey, I made 60,000 profit. Mom was so happy. Oh, my son made 60,000 profit. Dad came, he saw accounts. Donkey fellow, what have you done? You lost the money in the business. That boy is shocked. He does not know mathematics, accounts. 60,000 profit I made in the business. What is he telling? Donkey fellow, if I apply historical cost method, 60,000 profit you made. But historical cost does not consider the inflation. Now, when I consider inflation, same profit if I have to maintain next year, apnina, this much capital is required. But you don't have that much money. So from where will you take that money and go? Home only. From home, if you're taking the money and going apnina, what business you have done, what profit you want? But in reality, this gentleman, has he earned any profit? No. He's wasted time, energy, effort, everything. So this importance, this feeling, you got to know under only this method. Till this day, did you ever realize from this point of view? You did accounting in 11, 12 foundation, no? Inter schedule 3 எல்லாம் முடிச்சிருக்கீங்க. From this point of view, did you ever think? So this concept is making you think the importance of a capital in the business, importance of inflation in the business. So whenever you do business, it is important to consider the inflation that is going around in the industry. Got it? Not got it? So therefore, you come to case 2. 36,000 rupees is my retained loss. 36,000 retained loss. So 60,000 profit, one side you've done, you're very proudly saying, no, in fact, you've done a loss of 36,000 rupees considering the inflation. Considering inflation, you've done a loss of 36,000 rupees. Based on this, questions have come in the exam. Based on this, questions have come in the exam. So those who are taking this very lightly, no, you'll not be screwed. You'll be royally screwed if this question comes in the exam. This is actually easy, but people, since they don't understand the concept, no, they don't get a hold of this topic. It's actually easy, but people don't understand what mathematics indices they are multiplying and so they leave this topic and go. Most of them. You ask your seniors, friends who have completed inter or still struggling in inter, they will tell you. Please do not skip this. Very, very important. Now, there is a problem in method 2, people. Like how we had problem in method 1, no? In method 1, inflation was not considered. It was ignored. In method 2, you took inflation. You considered inflation. You know what inflation have you considered? You have considered general inflation, overall inflation. Overall inflation. My simple question to all of you, overall country level inflation is, let's say 10%. Inflation and other things have become expensive by 10%. What I was getting at 10 rupees, last year, the same product I'm getting at 11 rupee now because inflation is increased by 10%. So in the method 2, they are considering overall inflation. My question to all of you, will the inflation be same percentage in every industry? If things are getting expensive by 10%, let's say in electronic industry, inflation is 10%. In the jewelry industry, is it 10%? It is even more higher. Correct? No. What does the gold? Okay, forget gold. Silver, let me take. What is the silver price 1 year or 2 years from now? 1 lakh rupees was silver rate per kg. It went all the way to 4 lakh rupees. Now it has come back to, I think, 2.5 lakh rupees. Somewhere in that range it is trading. From 1 lakh, it went to 2.5 lakhs on average right now. So inflation is increased by how much? Inflation is increased by 250%. 250%. What? In every industry, inflation increased by 250%. No. In other industries, the inflation increased only by 5%, 10%, 2%, 7%. So inflation in every industry, will it increase in the same percentage? No. So one of the experts said in method 3, why should I consider inflation which is general in nature? Inflation, no. I'm not saying inflation is not required. The third expert is saying we need inflation. But why the hell are you taking overall general inflation? You take inflation of my business, no? Ennod industry enna inflation irukku. That record is there. You take that. Don't take general inflation. Take specific inflation. Got it, not got it. Specific inflation which is affecting my industry. That you take. So when you take specific industry related inflation, that is called as physical capital maintenance. Physical capital maintenance method. Got it, not got it. Got it or not got it? Okay. Thank you, Malgood. Now, let's see one example. Let's say this example. All of you read it. No, same question. What is the difference? You tell me. The price of the chocolates at the end of the financial year for next year's purchase is 25 per piece. Okay, wow. Now, previous question. When 100 rupee was my inflation index, general inflation index, chocolate price was 20. Today, if I go and buy in the new financial year, inflation index is 120. What is my proportionate cost price? 24. This 24 is the cost price considering the general inflation. Actual inflation in my business is a little bit higher, because of which the purchase price of the chocolate is not 24, it is now 25. So here we are considering 25 as the chocolate price, revised chocolate price from specific inflation index. This inflation is the inflation actually affected in my industry, industrial inflation. So can I say method 3 is more realistic than method 2? Method 2 is more realistic than method 1. So first preference always should be given to method 3. When should I not use method 3? In some industry, you cannot get the inflation. You cannot get the inflation rate. That is when you go with the general inflation rate. That is when you go to method 2. Got it, not got it. When you cannot even get inflation at all, they will go to method 1. Got it, not got it. Okay. So how do we do it, sir? Same format, same strategy, no change. For all the three, the format is same. What is the format? Closing capital. Closing capital. We'll say this as historical closing capital. As on 31st March, which year? 26. How much it is? Same 1,80,000. How did you get it? Opening capital plus additional capital plus profit minus drawings. I'll get closing capital. Same thing. This much 180, this much closing capital is there in my pocket. Now we have to see whether this is sufficient or not. In this 180, how much capital is required to start the business next year? In the beginning of the next year, I need opening capital. Which opening capital? At historical cost or at the indexed value? At the indexed value. So indexed value. When do I need this? 1,426. This is 31,3, no? I said 2, sorry. 31,326. Previous year. And this is current year. Current year. How much should be my opening capital? How much should be my opening capital? 20 rupees was the purchase price. 20 rupees was the purchase price. When my capital was 120. Now, what is the price per chocolate? 25 rupees. So, to buy the same amount of chocolates, how much capital I need now? I need 1,50,000. Sir, one more time, sir. To buy 6,000 chocolates at 20 rupees, you had a capital of 120. So, in the 20 rupees per chocolate, let's say, how much capital was there in your hand? 120. Now, the price of the product is increased from 20 to 25. So, can I say your opening capital also should be proportionally increased? Yes. So, how much it should be increased by? 30,000. So, what is the opening capital required in the start of the next year? 1,50,000 I need in the start of the next year. How much is there in your pocket right now? 180. How much you need next year? 150. How much is there in your pocket right now? 180. How much you need next year? 150. So, how much extra you have? 30,000. This is called retained profit. Either actual profit you earned. The remaining 30,000 which you have earned is only compensating the inflation. It's compensating inflation. Got it, not got it? Okay, not okay. Imagine this was 180. This was 180. So what is the profit earned? 0. But you'll proudly say, no, 60,000 profit I earned. Arey donkey fellow, the 60,000 profit what you earned is only earned to cover up your inflation price. So in reality, you did not earn any profit with which you can buy the car. To buy car, to buy mobile phone, to go for foreign trip, you need profit. Which profit? You need retained profit. Retained profit is that profit which you can actually enjoy, which you can actually withdraw and enjoy. Got it, not got it? So in business, the profit what you earn, no, net profit, it has got two components. One is inflation component, one is retained profit. Out of these two, which has to be retained in the business? Inflation profit has to be retained in the business so that you have the remaining retained profit which you can enjoy. Got it, not got it? Any problem?
No.
Now, क्या एक्स्ट्रा ब्रेक चाहिए? दोनों वही बात चल रही दिख रहा है मेरे पास. Example 8. Hello. Example 8. A trader commenced a business on page number 2.26. Financial capital maintenance at historical cost. Financial capital maintenance at historical cost. A trader commenced business on 1/1/2001 with 12,000 rupees 12,000 represented by 6,000 units of a certain product at 2 per unit. Means what? He has purchased 6,000 product at 2 rupees per unit. So total how much? 12,000 rupees. 12,000 rupees is the capital with which he started the business. During the year, he sold his unit at a profit of 3 rupees. Sorry, he sold at 3 rupees per unit. So selling price is 3 rupees. What is profit per unit? 1. How many chocolates he's got? 6,000. What is profit per unit? 1 rupee. So 6,000 is total profit. Got it, not got it? Now, what is the closing capital, people? What is the closing capital? Opening capital 12,000 plus profit 6,000 is equal to 18,000 closing capital. But from that he has withdrawn 6,000 rupees. So minus 6,000 drawings up Tina, 12,000 is the actual closing capital. So closing capital is 12,000. What is the opening capital required in the next year? 12,000. Is there any profit that I can withdraw? No. The profit what is required is already withdrawn. The trader can start the next year by purchasing 6,000 units at 2 per unit once again and sell it for 3 per unit. So like that, he will repeat the whole process continuously if there is no change in the price of the product. So this will continue if there is no inflation. If there is no inflation up to now, whatever 6,000 rupees profit is earned, no, that is called as profit which can be enjoyed and withdrawn. Got it, not got it? If there is no inflation, same process will continue. 12,000 ka chocolates purchased, sold it for 18,000, 6,000 profit earned, that 6,000 profit you will withdraw. Same thing will continue. This can continue only when there is no inflation. But if inflation vandiruchu appadina, then calculation has to undergo a change. Got it, not got it? Now, financial capital maintenance at current purchasing power. Can I ignore this example and do one question directly from your ICI module? Now that you understood the concept, no need to go through example. You can take example as homework. Same thing is indicated. Illustration 2 will do. It says that A trader commenced business on 1/1/2001 with 12,000. Ayo. Same thing. Can we do a different question? We'll do a different question. Light difference will be there, but we'll discuss this. From scanner, we'll take some past examination question. I'm looking for one question where all the three methods are asked. 19th question will do. Super. Pep made 23 question, people. Pep made 23 question. Millie started. I can say Millie, no problem, no? Mill. I knew people will come with different opinion. Adan kekala na. I'll say Millie only. Millie started a business on 1/4/22 with a capital of 15 lakh. She purchased 1,500 units of stock at 1,000 each. How many units is purchased? 1,500 units is purchased. What is price per unit? 1,000. She sold the entire stock for 1,500 each. So purchase price 1,000, selling price 1,500. What is profit per unit? Profit per unit 500. Multiply with how many units? 1,500. So 1,500 units multiplied by profit 500 per unit. How much? 7,50,000 is called as profit. So in the entire year, what is the profit that she has earned? 7,50,000. Super. You are required to calculate. Maximum amount which can be withdrawn by Millie in order to keep her capital intact if financial capital maintained at historical cost, current purchase price, physical capital maintenance. Got it, not got it? Okay. Who will do it? Let's start. First is working note number 1. Calculation of profit. Calculation of profit. Profit is equal to quantity sold into profit per unit. Not donkey fellow, you can't say piece now. This unit. Piece. Quantity sold how much? 1,500. Profit per unit is how much? 1,000 selling price. 1,500 selling price minus 1,000 cost price. How much it is? 500. Multiply and tell how much it is. 7,50,000. 750 is profit. In example, once you write this, put a box against it, so that the person who is correcting the paper will understand that, okay, this is the profit. He will not look into other things. So that is whatever the intermediate answers are there and final answers are there, as long as possible, try to highlight it. Chalo, next is what? Working note number 2, donkey fellow. Calculation of closing capital. Calculation of closing capital. Closing capital is equal to opening capital plus profit. In this case, there is no drawings, there is no additional capital. So unnecessarily, I'll not create the formula. How much is opening capital? 15 lakhs. Profit is how much? 7,50,000. Give reference to working note number 1. Give reference to working note number 1. Tell me the total closing capital. Very good. Therefore, closing capital is equal to 22,50,000. Put a box. Now, next is what? What is heading? Financial capital maintenance at historical cost. Financial capital maintenance at historical cost. Closing capital at historical price. How much it is? 22,50,000. This is coming from working note number 2. As of now, in my pocket, how much is the closing capital? 22,50,000. Now we are doing historical cost. In historical cost, inflation is not there. Those who are not having inflation in their business, they'll go with method 1. என் பிசினஸ்ல இன்ஃப்ளேஷனே கிடையாது. Tell me, no, in my business, CA.Prathik Academy, coaching business, what inflation is there? No inflation. Inflation from my point of view, not from your point of view. She's telling from her point of view. Sir, you are increasing fees. What is inflation, sir? No inflation for me. So I'll use method one. No inflation for me. What inflation? Rental. See, my pain is not EB charges. My pain is not none of these. My pain is rental charges. If rental charges increase appadina, inflation for me. Otherwise, nothing. Got it, not got it. So imagine no rental charges increased. Everything is same appadina. For me, no inflation. So which method will I prefer? Historical cost. Got it, not got it. So when I started this business, I started with what capital? When I say literally means this question I'm asking. Now you guys said nana ஞானி நீ என்ன வச்சு ஸ்டார்ட் பண்ணீங்கன்னு சொல்லி நான் எப்படி சொல்ல முடியும்ன்றாங்க. I'm not literally asking for my business. I'm asking for this question. 15 lakhs. This is the capital Millie wants to maintain next year also. With no inflation, what is the capital to be maintained? 15 lakh. How much she can withdraw? Opening capital at historical cost. So full profit 7,50,000 can be withdrawn. Got it, not got it. Retained profit. Now, I want to do one small twisting here. Can I do it? Include in this additional capital of 1 lakh and drawing against capital of 2 lakh. Possible, not possible? Question can come? No, it can come. Profit will remain same. Working note 1, no change. Working note 1, no change. Working note 2 will change. So what is the closing capital? 15 lakh opening capital plus 1 lakh additional capital plus profit 7,50,000 minus drawings 2 lakh. How much it is? 29 lakh. Others please confirm. I know, that's why I said confirm அப்படினு சொல்லிட்டு. I know some donkey fellows will make mistakes. 21 lakh. And you know what people say? What people say? Sir, I did silly mistake, sir. What mistake? Silly mistake. 21 lakh 50,000. Online people, are you all getting the same answer? Hey, 2 people left the meeting also went. Yes. Okay. Now.
Minus.
What do I need? Maximum amount of profit that I can withdraw. Okay, not okay. Don't do anything, just observe now. Don't do anything, just observe. What is the closing capital currently in my pocket? 21 lakh 50,000. What is the capital that I want to maintain? The capital that you're wrong. This is where you're wrong. So the capital that you have to maintain is not just opening capital. You have to maintain also additional capital. And additional capital in the business done. In current year, you understood that without this additional capital, I cannot survive. Apona, in current year, you have purchased a product using how much capital? 16 lakh. Appo adu rendu சேர்த்து தான் maintain பண்ணனும். So minus opening capital minus additional capital. These both put together are the minimum amount that I require in the start of the next year. Got it, not got it? So how much I need put together? Put together 16 lakhs. How much can I withdraw now? 550 you can withdraw. Got it, not got it? Actual profit is how much? 750. But in the 2 lakh withdrawn, how much is balance? 550. If you come back to the format here, in my notes, in the beginning itself, I gave a drawing. What are the 3 types of capital maintenance? You don't have to go through all the below points in the exam. In the exam, if you go through this point alone, the chart alone, and below the chart I've given the format, this is more than sufficient. From closing capital, I'll minus opening capital and additional capital to get the retained profit. Got it, not got it? The same thing for the next 2 methods. You have to do the indexation. You have to do the indexation. Rendume indexation pannum. Both of them should be indexed. This is general indexation. This is specific indexation. For additional capital also will come. If you're getting confused, I'll add the point here and give. In the notes, I'll add the point here and give. Both has to be indexed. Both has to be indexed. Got it, not got it? Clear or not clear? Fantastic. Now, can I come back to the same question? Now they're telling that calculate the same maximum amount of drawing withdrawn to be withdrawn by Millie when the current purchasing power is so and so. Opening index at 100, closing index at 125. upon n. This index is specific index or general index? It is general index. General index. Got it? Not got it? So from 100 to 125, inflation is increased by how much? 25%. Got it? Not got it? Super. Now, put B below and write financial capital maintenance at current purchasing price. At current purchasing price. What is the closing capital? Come back to the original closing capital. 22 lakh 50,000. This will not change. For all the three methods, once you calculate the closing capital, it will be same unless additional capital and drawings comes into picture. Okay, wow. How much it is? 22 lakh 50,000. This is at historical cost. This is the capital in my pocket right now. Now I need to see how much opening capital or additional capital I need in the next year beginning. But that should not be at historical cost. It should be at indexed value. So I need to minus required capital. This much money I need in the beginning of the next year. Not at the historical cost, but at the indexed value. So working note number 3. Calculation of indexed opening capital. Calculation of indexed opening capital. When the inflation index was 100 points, my opening capital was 15 lakh. Now when my inflation index is what 125, what should be my revised opening capital? So 15 lakh. No, don't write this in exam income. This is only for your knowledge. You directly write 15 lakh into 125 by 100. How much it is? 18 lakh 75,000 is the revised opening capital required. This is the minimum money I require to start the business next year. 18 lakh 75,000. So you already have in pocket how much? 22 lakh 50,000. In the beginning of the next year, how much do you need? 18 lakh 75,000. So how much you can withdraw? 3 lakh 75,000 you can withdraw. This is the maximum amount of drawing. 3 lakh 75,000. You tell me, people, this is very difficult. Tell me. Tell very difficult this is. नींद आ रही है? कुच्ची लेके मारूंगा तेरे को मैं. नींद आ रही है. Drink water, she's telling. Drink. खत्म. Oh my God. That is there. No.
नहीं सर, पी करने के बाद देखें. ये मक्खन मार रही है.
नहीं, ये मक्खन नहीं मार रही है. She is telling my inner voice. Now, they are telling now, calculate the same maximum amount of drawing, but now under physical capital maintenance method. Now price per unit indra. Price per unit apnina, can I say this inflation is related to our product? Related to our product? So this is specific indexation. Specific indexation. How much is the price per unit? Earlier. Who said 1,500? Donkey fellow, 1,500 is my selling price. What is the purchase price in the beginning of the year? 1,000. Exam where you make mistake, you'll compare with 1,500 income. Because this is what you have sold at. Arey donkey fellow, that is your selling price. Now 1,350 is my purchase price. 1,350 is purchase price at the beginning of the next year. I will compare this with the beginning of the previous year, which is 1,000. Inflation or no inflation? Last year, you purchased the same product for 1,000. Now, as a business, Milli has to purchase the same product for 1,350. For Milli, inflation or not? Yes. So what is inflation? 350 rupees inflation. Got it, not got it? Now, point number C. Physical capital maintenance method. PCM. Physical capital maintenance method. Got it, not got it? Format same only. We'll start with closing capital. How much it is? 22 lakh 50,000. Rombo important. Physics, chemistry, maths. Inge the answer solriya. This is at historical cost. This is at historical cost. 22 lakh 50,000 capital is there in my pocket. Now I need to see how much of this money I need in the beginning of the next year as opening capital. So minus opening capital required in the next year at specific indexed price. In exam, no need to record all this. This is only for our knowledge. Specific indexation. Working note number 4. Calculation of specific indexed opening capital. Chalo, no problem. Correct. Very true. Specific indexed opening capital. I'm sorry about the handwriting. It's not my fault. This pen and tab is not correct. I can't do anything. You have to talk to Anita ma'am. A tab is not some problem in that also. Tab problem, ma? Never problem in me. Now tell me, 1,000 rupees. 1,000 rupees was the purchase price of the chocolate. For buying the chocolates at this price, what is the capital required? 15 lakhs was the capital. When 15 lakh was the capital, the purchase price was 1,000. Now, how much is the purchase price? 135. Now, if 1350 is the purchase price, what should be my revised opening capital? Cross multiply. How much? 20 lakh 95. 25. Oh my God. Okay. 20 lakh 25,000. Any problem? This is my inflated capital. This is my inflated opening capital. 20 lakh 25,000. So out of 22 lakh 50,000, I have to retain in the business 20 lakh 25,000. 20 lakh 25,000. Balance profit you can withdraw. How much it is? 2 lakh 25,000 is the balance profit that you can withdraw. That is called as retained profit. 2 lakh 25,000. Balle. For this, how many marks? 5 marks. This is PEP May 23 examination. In May 23, this question was asked. God knows how many of them did this, how many of them skipped this. Was this worth skipping? Any masala in this? Nothing. Jujjubi this is. Now we'll take a... No, what I'm telling is, listen to me, listen to one deal. You give me 20 minutes, I'll wrap up with the class. அவ்வளவுதான் ஒரே கான்செப்ட் தியரி தான் முடிஞ்சது. You want a break? Chalo, no problem. It's what now? 6:46. 6:50 we'll start. 4 minutes ka break I'll give you. Thank you so much. Yes, people, welcome back from the break. So let's continue. The last concept of this chapter, which is measurement of elements of the financial statement. Tell me something. Have you studied the elements of the financial statement? What are those? Asset, liability, equity, income, expense. These elements, how to measure while recording, how to measure is what we're going to study. We learned accounting process, no? 11, 12 foundation. Inter also beginning I said. Accounting is a systematic process of identifying business financial transaction. Second step, measuring in terms of money. Now we're going to learn how to measure. This measurement ka concept is given where? In the framework. Got it, not got it? You take any element of the financial statement. These can be measured in any one of these 4 ways. In any one of these 4 ways, you can do the measurement. First measurement technique is called as recording the transactions at the historical cost. Recording the transactions at historical cost or at current cost or at realizable value, also called as settlement value. And last at present value. I would have appreciated had they mentioned one more point called as FE, fair value, not face value. What is it? Fair value. So from ICA's point of view, if they ask you what are the basis of measurement, you should write only 4 and come. But in reality, there is one more method of measurement, which is fair value. Got it, not got it? Okay. Now, what is the meaning of historical cost? If I record any expenditure or if I record any asset at its transaction value, what is transaction value? To buy this asset, I paid 1,000 rupees. While transacting, I paid 1,000 rupees. This is called as transaction value. The value at which you transacted the transaction is called as transaction value. That is called as historical cost. When you record any expenditure or asset at that cost, that is called as historical cost. Yes or no? Accounting standard is there? No, accounting standard. ASB has considered these 4 measurement techniques while drafting accounting standard. If you take accounting standard 10, AS 10 says that all the assets should be recorded at the historical cost only. 4 option இருக்கு. In framework they given 4 options, but AS has limited your option. They said that nothing doing, we will record at historical cost only. At the max, if you want to revalue the asset அப்படின்னா I can allow to revalue it at fair value, புரியுதா? That's why I said had they given fair value here I would have been happy. At the max you can revalue the asset. இது தவிர்த்து you cannot opt for remaining 3 options. Sir, not able to understand, sir. Can you give an example in different way? Chalo, okay. Imagine I have purchased one building for academy. Imagine, I have not purchased, imaginally I am saying. Imagine that I have purchased one building for running academy. When in 2020. How many years back? 5 years back. By paying 5 crore, by paying 5 crore. Any problem? No problem. This building in the year 2020, when I recorded the journal entry, what is the journal entry and what is the value? Please tell me. Building account debit. How much? 5 crore. To bank 5 crore. Any problem? This 5 crore is called as transaction value. What is it called as? Transaction value. Also it is called as historical cost. Any problem? This is in 2020. My question to all of you. Now we are in 2026. Can you please estimate what could be the probable value of this building? Building means I'm considering with land. Building means it is with land. This is land and building. Rather, I would say land and building. Land and building put together 5 crore. Bundle land and building put together 5 crore. What do you think should be the worth of this land and building today? Definitely more than 5 crore. How many crores? 9 crore I'll put it. 9 crore. This 9 crore is there, no? This is called as fair value. What is it called as? Fair value. Now what is the meaning of fair value? If I go and sell this building, land and building today in market, without any pressure, without anybody's influence, rumba aram se pormiya, if I sell this, I'll be able to get at 9 crore. That is called as fair value. Fair value transactions means transaction taking place at arm's length price. You know what is arm's length price? Have you come across these terms? Arm's length price. Have you come across this term anywhere? Arm's length price. Have you come across anywhere? Anywhere in foundation? No. Arm's length price அப்படின்னா it's not one arm distance price. Arm's length price means you do a deal at such a price that அதாவது நான் டீல் பண்ற வேல்யூ is such a value, whether I deal with a third party or whether I deal with any of my known friends, I give it at the same price. Means it's a fair value, market price, basically market price. I'm selling this building for 9 crore. Whether you buy, whether my brother buys, whether my friend buys, any of my relative buy or any third party, எவன் வேணா வாங்குங்க, எல்லாத்துக்கும் ஒரே price, which is 9 crore. Why? Because this is a fair price. Means arm's length price. Imagine the same land and building I sell to my brother for 8 crore. Why? Because he has an influence on me. I'm your younger brother. No. For me, you'll not give it 8 crores. I'll get emotional. I will give this land and building for 8 crore. This is not fair value. This is realizable value. This is called as realizable value, which means what? This asset, if I sold now to him, I got this much value, realizable value. Got it, not got it. Inniki na vikke pona, he has committed for 8 crore. Both are realizable value only. If I sell this building at 9 crore to the third party, whether I sell it for 8 crore to the related party, both are called as realizable value. But one is called as fair value. One is called as settlement value. One is called as fair value. One is called as settlement value. Rendume same da. And what is the difference? In fair value, whoever buys, third party, related party, anybody who buys, he buy at arm's length price. எல்லாத்துக்கும் ஒரே price தான். I'm not under influence of anybody. That is called as fair value. What is settlement value? When I'm selling at discounted price under influence அப்படினா that becomes settlement value. So இது பத்தி வந்து பெருசா difference எங்கேயுமே வந்து mention ஆகாது. So when you come here, the document realizable value, no? So whether I sell this property for 9 crore to the third party or 8 crore to the brother, both of this from the point of view of the measurement concept, it is considered as realizable value. This differentiation will get cleared when you go with the specific AS. When you come to AS 10, we'll emphasize on fair value. So between fair value and the settlement value, there's a thin line of difference. Fair value is at arm's length price, means at a fair price. Whoever come and buy, it's at fair price. Settlement value will be little bit different. So for example, imagine I'm selling this building under pressure because I have some debt. To settle that debt, I'm selling this building. And if the buyer knows this aptina, he'll wantedly come and ask for the reduced price because he knows I'm under pressure. So when I sell this particular land at this value, we may call this as settlement value. That is not fair value, no? What is the fair value of this land and building? 9 crore. But looking at my situation, is asking for 8 crore. So I'm also going to settle that at 8 crore. Up at what value it is? Settlement value. So when you see in this particular situation, you might feel that fair value is different, settlement value is different. But if the situation is not there, then fair value is equal to settlement value. That's why they have called it as realizable value. So they didn't do the bifurcation during the framework creation. Because framework creation, they didn't think that much while doing the framework. But now when they drafted the AS, no, they put the thought into it. That is when the concept of fair value came into picture. Got it, not got it. So what is fair value or realizable value or settlement value? It is nothing but the asset that I acquired in the past. If I sell it today, what value I will get? That is called as realizable value. That is called as settlement value. That is called as fair value. So 5 crore worth of asset, if I sell it 9 crore, so 5 crore is called as historical cost and 9 crore is called as realizable value or fair value or settlement value. Got it, not got it. Vikka போகும்போது வந்து settlement value, realizable value. விக்கல நானு. I just want to revalue. This land and building in 2026, I want to revalue. Does AS10 allow me to revalue? Yes. When we study AS10, I'll discuss in depth. I feel that I want to revalue the land and building in my books and show. Nothing wrong, no? The value of the land and building over the years has increased or not? It is increased. So I want to show that at the revised value. Can I show or not? Yes. That flexibility is given or not given? It is given. Who is given that flexibility? Accounting standard 10 is given the flexibility. Got it, not got it. So now, when you purchase the asset, initially at what cost should I record? At the historical cost. Every year, what cost will be maintained? Historical cost will be maintained. If it is depreciable asset, depreciation is on what value? On the historical value. You don't revalue every year, and on the revaluation, you don't charge the depreciation. On the historical cost only, every year you charge depreciation. Got it, not got it. This 5 crore worth of land and building, let's suppose I'm going to use it for 20 years. What is depreciation per year? What is depreciation per year? 25 lakh. 25 lakh is depreciation per year. Every year 25 lakh if I charge aptina, I'm charging the depreciation on what cost? Historical cost. Got it, not got it. So whether it is appreciable asset or depreciable asset, it will be recorded at the historical cost. Who is saying this? AS10. AS10 has got this inspiration, this knowledge from where? From framework. So framework has said that ASB, when you're drafting accounting standard, you have a flexibility to choose any of these 4 measurement methods for measuring each elements of financial statement. Got it, not got it. If you see AS2, which talks about valuation of inventory, angenna measurement technique to value this inventory, what is the measurement technique adopted there? They said historical cost or NRV, whichever is lower. So this historical cost, NRV, is come from where, boss? ASB suggested this in accounting standard. No. How did they talk about this? Because this was suggestion given by framework. So framework told that elements of the financial statement can be measured in any of these 4 methods. Has the framework given us the flexibility to do whatever we want to do? No. Because who's coming in between? Accounting standard is coming in between. So we have to follow what is given in accounting standard. But our ASB board, ASB has considered this 4 methods while drafting each accounting standard. So over accounting standard, it is applying one method which they feel is appropriate. For AS10, it is historical cost. For AS2, it is historical cost or NRE, whichever is lower. Got it, not got it? Clear or not clear? Okay. So what is historical cost? The price that you paid at the time of transaction. Basically, transaction value is called as historical cost. What is realizable value or settlement value? The same asset, if I sell today in the market, how much money will I receive? The same element, if I sell it today, what is the money that I will receive? That is called as realizable value. In our example, it was 9 crore. Got it, not got it? Now, what is the meaning of current cost? Same land and building, same size, same floor, same height, same square feet of land, same square feet of building construction, same feature. If I buy today, what is the price? Apana, in the building, பக்கத்துல ஒரு building இருக்கு. What is the size of this building? Whatever is the feature of this building, same size, same feature, next building. But its cost is 12 crore. Because new building. This is little bit old building. Got it, not got it? It could be either 12 crore or it could be even 8 crore. So that new building 8 crore, your building 9 crore. Why? Because our quality of the building that we've maintained is that good. The classroom infrastructure facility is that good. We feel that our worth of the building is slightly better than the other building. So basically, what is current cost? I'm comparing my building cost with that of the new building that I buy. So can you give another example? I can give. Now, do you have the mobile phone? I'll not open it, don't worry. Mobile phone. This was purchased 3 years ago by paying 50,000 rupees. 50,000 rupees. No, it's not the 50. It's like not 50. Okay, assume 50,000. 50,000 is the phone. This is called as historical cost. What is it called as? Historical cost. Same mobile phone, same ditto exact feature. Today, if I buy, how much it is? 55,000. So what is that 55,000 called as? Current cost. Current cost. Got it, not got it? Okay, not okay? Okay. Then comes present value. If these three are clear, I'll go to present value. This is slightly technical. In foundation, you did one chapter called as goodwill. In that topic, there is one method called as annuity method of calculating goodwill. How many of you have studied the topic honestly, properly? Please tell me. How many of you have studied annuity method properly in goodwill topic? Okay, wow. That is one you studied, one place. Another place where you studied is time value of money. In time value of money, did you learn the concept of discounting? Yes. That is what we are going to learn. Now listen to very carefully. I'm giving one example. Those who have not studied well, for them I'm giving example. I want to earn 1 rupee at the end of the next year. By 31st March 27, I want to earn 1 rupee. Today, 1/4/26, how much money if I invest, I'll be able to earn 1 rupee at the interest rate of 10%. This is my investment value. I want to invest some money at 10% to get this 1 rupee. So why I want this 1 rupee? Because I want to buy 1 rupee ka chocolate after 1 year. I want to buy 1 rupee chocolate after 1 year. So for that, how much money should I invest in fixed deposit at the rate of 10% that this money will grow up to 1 rupee? Inning I will invest pannu. Tell me first. For that, you have to take your calculator. 1 divided by 1.10. 1 divided by 1.10. 1 divided by 1 plus rate percentage. 1 divided by 1 plus 10%. What is 10%? 0.1. 0.1. So 1 divided by 1.10. 1.10. 1 plus 0.1 is 1.10. Sir, if it is 20% now, 1 divided by 1.20. It is 15% now, 1 divided by 1.15. So what is changing? This is changing. Point mala change out. If it is 5% means 1 divided by 1.05. 7% means 1 divided by 1.07. Got it, not got it? You do 1 divided by 1.10 in calculator. What are you getting? 0.9090. I want 4 decimal. 9091. You'll get 9091, which means what? Today, if I invest in fixed deposit 90 paise, 0.901, 9091 today, if I invest with interest being added to it, it'll become 1 rupee after 1 year. If you don't believe, take your calculator again. With 0.9091, please add 10%. You will get 1 rupee. You will get 9 rupee. Round off, you will get 9 rupee. 1 rupee. You will get 1 rupee. Got it, not got it. Got it, not got it. Any difficulty? What do you mean by this? It means that as the time passes by, the value of the money will change. Value of the money will change. I gave that example earlier also. Your dad, 20 years ago, 25 years ago, 30 years ago, after completing college, he earned 5,000 per month. 5,000 per month. Today you're earning 15,000 per month. 15,000 per month. 30 years ago, a company was able to hire an employee just by paying 5,000. Just by paying 5,000. Now today, after 30 years, to hire same one employee, we have to pay 15,000. So the value of the money is increased or decreased? The value of the money is decreased, not increased. She's saying paisa, 5,000, 15,000 money increased. Donkey fellow. To hire one labor, you paid 30 years ago 5,000. To hire the same labor, you have to pay 15,000. If you give 5,000 to that fellow, will he accept? If I pay you 5,000, will you accept? What will you say? Hey, with this 5,000, what will I buy? Upon a value of the money, not there. Value of the money is decreased every year. 5,000, more value. Today, 15,000, less value. So over the year, the value, the worth of the money has reduced. 30 years ago, you could have purchased 1 tea for 1 rupee. You give 1 rupee coin, you will get 1 tea. Now give 1 rupee coin, you'll take the chiller on a face and he'll throw. He'll ask 10 rupee minimum. 10 rupee. Apana, அந்த காலத்துல 1 tea was 1 rupee. Now if you give same 1 rupee, he's not valuing it. He says minimum it is 10 rupee. So worth of the money is increased or decreased? The value of the money has decreased because you have to pay more money now. Got it, not got it? Got it, not got it? Okay. Now, after 1 year, after 2 years, I want to earn 1 rupee. I want to earn 1 rupee. Today, how much should I invest? At the rate of 10%. Now what you will do, you know? 1 divided by 1.10, you press equal to 1 time. You will get 0.9091. Press 1 more time equal to, 2 time equal to. How much it is? 0.8264. Got it, not got it? Now listen to me. One time again, I'm telling, listen to very carefully. Do what I'm saying. In your calculator, press 1 divided by 1.10. Equal to 1 time if you press, you'll get this. Equal to another time you'll press, you'll get this. After this, immediately press GT. Grand total. Press GT. What are you getting? 1.735. GT नहीं है? What a waste calculator. क्या करना कैसे होगा GT के बिना? Guys, any calculator without GT is useless calculator. Any calculator without GT is useless calculator. Who don't have GT in your calculator? Useless people.
People?
Amma. That is your choice. That will now, okay, wait. Now Lisha is telling I'll use M plus. I want the annuity factor for 10 years. So are you trying to tell that you'll do 1 divided by 1.10, M plus, again you repeat the entire process? That's waste of time. In exam, you will not have that much time, my dear. In exam, you will not have that much time. Got it, not got it? Got it, not got it? So this 1.735 is called as discounted value. What is it called as? Sorry, annuity value. This is called as annuity value. Annuity means what? This is sum total of these both. Either end add pannina, you'll get 1.7355. Got it, not got it? Got it, not got it? Online people, got it, not got it? Okay, wow. So If I invest 0.82 here, அப்பனா இங்க நான் 0.82 have to invest 0.8264. If I invest 0.8264 here means 10% plus 10%, it will become 1 rupee here. அப்ப நீங்க 80 காசு நீ போட்டா 2 வருஷம் கழிச்சு it become 1 rupee. Got it, not got it? This point is clear or not clear? This is clear. Can I go to next point? Okay. I'm telling. I just taught you how to calculate the annuity factor. This annuity factor will apply in the next part. Now, goodwill படிச்சீங்களா? All of you goodwill you studied, no? Business is sold here. And we want goodwill for next 3 years. We want goodwill for next 3 years. Under annuity method, what they tell us, அதாவது 10,000 rupees is the profit sacrificed in 3 years. If I continue the business, should I tell this or not? Sir, I'll tell it. Those who want to take it can take it. Tasty Bite is a business run for 1, 2, 3, 4 years. Tasty Bite business is run for 4 years. Now, Tasty Bite is selling this business to Annapurna. Will it sell free of cost? No. It will ask for 2 things. Give my capital back and give my goodwill. The hard work that I've done in last 4 years, no? For that, I want my money. This hard work will reap me future profits. That future profit I want. That future profit is called as goodwill. So Tasty Bite is asking 10,000 plus 10,000 plus 10,000, 30,000 today. Pay me 30,000 here. Will Annapurna pay 30,000? Annapurna is telling, if I don't take over your business, if you will do the business, apnina, you will get 10,000, 10,000, 10,000 in future. So motto 30,000 eppo varum at the end of 3 years. Total 30,000 will be there in your hand at the end of 3 years. You want 30,000 at the end of 3 years, no? Why are you asking that 30,000 today itself? Why are you asking beginning itself? So in beginning, I'll give you not 30,000. I'll give you the money at the discounted value. Whatever value I give here, no? You invest in the fixed deposit. By the time it comes to 3rd year, it will become 30,000. How much is the fixed deposit interest rate? 10%. So 30,000 rupees, we are discounting 10%. And here this value, what we get is called as discounted value. This is called as present value. What is it called as? Present value. So how do I do this, sir? Very simple. Take your calculator and do 1 divided by 1.10 equal to 1 time, equal to 2 time, equal to 3 times. Sir, why 3 times, sir? Because here it is for 3 years. Then do GT. How much are you getting? 2.4868. You're getting? Upona, I need how much rupees per year? 10,000 per year. If I multiply with annuity factor 2.4868 apnina, what is the amount that we're getting? 24,868. So Annapurna is telling that today I will give you 24,868 only. How much will I give? 24,868. இது நீ என்ன பண்ணா 10% வட்டிக்கு நீ வந்து FD பண்ணிடு. By the time it comes to the end of the 3rd year, it become 30,000. So the process of going backward and deriving the initial amount is called as discounting. What is it called as? Discounting. From 30,000, I backwardly traveled to get the initial value. That is process is called as discounting. Got it, not got it? So similar concept is applied here. Present value concept. Now what they're telling is that this building is there, no? Whose historical cost is 5 crore. What is a realizable value if I sell today? 9 crore. In the building or a value, we can do it in one more way also. We can derive the worth of the building in one more way. On what way, you know? Present value method. Present value means what? I have to do discounting. Of what I will do discounting? I will do the discounting of the future cash flow. What is this 10,000? Future profit, no? Future profit we discounted. Future profit we discounted. 10,000 rupees is future profit multiplied with annuity factor. I got this as present value, today's value. So now I'm applying the same concept. I'm telling if I use this building for next 3 years, how many years? Next 3 years, I will make 3 crore per year. How much I'll make? 3 crore per year. What is this? This is my profit. Future profit. Future cash flow. Every year I'll make 3 crore, 3 crore, 3 crore. Got it, not got it? Upon using this building for 3 years, how much money I'm generating? 3 crores per year. Correct? That I will discount. In 3 years, what is the total value? 9 crore. But is it the value 9 crore now itself? No. So I'll discount that. Basically, in 2026, we are doing the discounting. 2027, 2028, and 29. 3 crore I learn here, 3 crore I learn here, 3 crore I learn here. We are discounting this earning and see what is today's value of the building. From this building, what is the earnings can I make? That is the worth of the building. Present value concept says what? In the building, in the asset வச்சுட்டு நீ என்ன சம்பாதிக்க முடியுமோ அது அதோட worth. அந்த பில்டிங்கோட worth வந்து எப்படி மெஷர் பண்றீங்க? அதோட income potential, how much income that building is able to earn, no? Keeping that earning into criteria, you are calculating the value of the building. Now, for example, this laptop is there, no? I can record this laptop at the transaction value. In the laptop I purchased for 1 lakh. So I can record the transactions. I can record the laptop in my books for 1 lakh. What method it is? Historical cost. Or I can record at the realizable value. Means what? If I go and sell this laptop today in market apdina, I'll be getting only 75,000. So value of the laptop in my book should be only 75. Or current cost. Current cost means what? Same laptop with same feature. If I buy from the market, how much will I get? 1 lakh apdina. Then I have to record this laptop at 1 lakh rupees. These are the measurement techniques. Are we going to do same thing for asset? Because AS10 does not allow. But in the technique, current cost technique, present value technique may not be opt for asset. It can be opt for suitable for other elements such as expenses, other type of assets, other type of income, other type of liability. In the measurement is not only for asset. This measurement is for 5 elements of financial statement. Upon the asset, liability, expense, income, to record equity, to record in my books of accounts, at what value I should record. For that, what method is required? These 4 methods. So we're learning the 4 methods on overall basis, but in that AS, in respective AS, what method they have suggested, that method only we are going to follow. So in AS10, do they allow present value? No, it's not allowed. It is blocked. It is blocked. In valuation of inventory, do we record present value? No. But in framework, they have suggested these 4 methods. They are letting us know. They're telling us in framework, we gave 4 options. But in AS10, they restrict only to 2 options. What can we do? Got it, not got it. So framework, என்ன option கொடுத்திருக்காங்க அது நம்ம learn பண்றோம். So what option framework gave? One option is present value method. What is present value? If I'm confused that what should be the worth of the building in my books aptina, I can take the future earnings of this building. You discount it at today's rate, at that value you can show the building value. You can show the building at that value. Got it, not got it. So for example, using this building for next 3 years, how much will I get? 3 crore plus 3 crore plus 3 crore. How much? 9 crore. At the end of 3 years, how much should be in my hand? 9 crore. அப்போ இன்னைக்கு அதோட worth எவ்வளோ? Today that worth is how much? What is the discounting rate? I'll keep same 10%. How much? Same 10%. So now do 1 divided by 1.10 equal to for 1 year, equal to for second year, equal to for third year, and GT. How much it is? 2.4868. This is called as annuity factor. What is it called as annuity factor? 3 crore multiplied by 2.4868. How much it is? How much? Multiply and tell me how much. 7 crore 46 lakh. Can I make it 7.50 crore for round off? Chumma. Number convenience. You said 7 crore 46 lakh. I'm rounding up to 7 crore 50 lakh. So as per this method, what is the value of the land and building should be today? 7.5 crore. That's a different story. For land and building, AS10 does not allow this method. And a framework la enna option kuduthirukanga நம்ம learn பண்றோம். So this 7.5 crore, how did I get? I discounted the future cash flow. Future la இந்த building வச்சு நான் என்ன earn பண்ண போறேனோ அதோட discounting factor consider பண்ணி I have derived the value of the building. இந்த building ஓட மதிப்பு எது பேஸ் பண்ணி நான் டிசைட் பண்ணிருக்கேன்? Based on its earning capacity. If I use this building for next 3 years, it can generate me so much money. So much should be the worth of the building. This is one of the methods suggested by framework. But as AS10 accepted this, no. AS10 said that, donkey fellow, this income what we have to forecast, is it not subjective? Somebody will forecast 3 crore, somebody will say 5 crore, somebody will say 2 crore. Will it not lead to bias? Yes. இந்த மாதிரி ஆப்ஷன்லாம் கொடுத்தோம் நம்ம ஆளுக்கு எல்லாம் சொதப்பிடுவாங்க. So don't give all these loose options. Make them tight. So this option is got deleted from your accounting standard 10. They removed it. They said, I will not consider present value. நீ இது வேணா கன்சிடர் பண்ணு. This also is allowed, but other method is not allowed. அப்ப present value where are we using? In some other accounting standard. We'll use it in some other accounting standard. Got it, not got it. But these are the 4 measurement bases for each element of the financial statement is what we are going to learn. Got it, not got it. Clear or not clear? Historical cost. Once again, let me complete. Each element of the financial statement are recorded at the original price. Original purchase price, original acquisition price, also called as TV. TV stands for transaction value. Asset. Example. What is the element are we talking about? Which element are we talking about? Asset. A machine is purchased for 1 lakh. It is recorded at 1 lakh even if the market value becomes later 1.5. Upon a what method I followed here? Historical cost method. Market value, fair value is 1.5. Realizable value is 1.5. ஆனாலும் நான் 1 lakh record பண்ணேன். அப்ப நான் என்ன method follow பண்றேன்? Cost method I'm following. Got it, not got it. But on the other hand, if I recorded 1.5 அப்படின்னா, then I'm following realizable value method. Got it, not got it. Today morning we did non-going concern method. In that land building is there no property plant equipment. We revalued at 60. That 60 is what price? Historical cost. Kadayadu. 65 was historical cost. 65,000 was historical cost. You remember that example? PP in that balance sheet was 65,000. Realizable value 60,000. The 65,000 was historical cost. It was historical cost. But we recorded at 60,000. What value that 60,000 was? Realizable, not present value. Realizable value that was. Got it, not got it. So, the question that comes to your mind is, which is the best method? Of this 4, which is the best method? Nothing is best method. Nothing is best method. Method depends on the situation. Method depends on situation. For example, this building, if I want to show at 5 crore only, at historical cost, I'll follow historical cost method because I feel that is appropriate. On the other hand, if I feel no, I want to show the building at its original value, at its realistic value apdina, then I can show it at realizable value. Depending on the situation, if I need, I can show it. Otherwise, not required. Or if AS permits to show, you can show. Otherwise, you cannot show. So in this, you cannot say that this method is better or that method is better. There is no method better. It will depend. The selection of the cost method will depend on the situation you are into. Got it, not got it. If I'm a going concern aptina, I'll show the land and building either at historical cost or at the either at the historical cost or at the fair value. Fair value means what? Present market value. Got it, not got it. But if I'm going as per non-going concern method, if my entities become non-going concern aptina, can I show at historical cost? No. I have to show at realizable value. Got it, not got it. So selection of these 4 methods depend on your situations. Situation to situation will differ. Got it, not got it. Now, liability. I've taken a loan of 50,000 rupees. At what value should I record the liability? At what value I've taken it for? So what method I've followed there? What is the measurement method there? Historical cost. It is recorded 50,000 original amount payable. Upon it is historical cost method. Owner has invested 2 lakh rupees in the business as capital. I should record capital at what value? At historical cost only. Can we record liability, that is capital, at any other method? No. Universally, what have we agreed? No, we'll show this at historical cost only. Got it, not got it. Expenses, salary pay 10,000. How much should I record? What amount I'm supposed to pay? Transaction value, that only I'll record. That is historical cost. So all this value, measurement of that is derived from the framework concept. Got it, not got it. For recording expenses at this value, is there any particular accounting standard for it? No. அப்ப எதுல accounting standard இல்லையோ அதுக்கு என்ன apply பண்ணுவோம்? We'll apply framework. Got it, not got it? Okay. What is the meaning of current cost? Each element, how many elements are there? 5 elements of the financial statement are recorded at the amount which is required to buy or settle them today. Means if I buy the same product with the same feature today, what money I have to pay, that is called as current cost. The same mobile phone what I purchased 3 years ago, same mobile phone afresh if I purchase apdina with same feature, what is the price? That is called as current cost. Can I record my asset based on the current cost? இப்போ என்னோட mobile ஒன்று இருக்கு. Before 3 years I got it for 50,000 rupees. Today same mobile phone for 55,000. But what is the book value of this asset now? 10,000 because 3 years I've used it. So what is my book value after depreciation? 10,000. Are you trying to tell me that since the current cost of the product is 55,000, can I go and increase it again? No, there's no logic to it. That's why AS10 is not considered current cost in the valuation method. Got it, not got it. But option is given in the framework. Just because option is given in framework, you will not apply everything. What will make your financial statement understandable, reliable, relevant, and comparable? That measurement alone you have to take it. And that is what ASB has done. Asset record பண்றதுக்கு வந்து historical cost better அப்படிங்கிற decide பண்ணிட்டாங்க. Why? Because if I take historical cost, then the financial statement will be understandable, reliable, transparent, etc. etc. If I record current cost அப்படின்னா, will it be correct? No. So when you're taking the measurement basis, no, you have to choose such measurement basis which will not compromise the qualitative characteristics of financial statement. Got it, not got it? Clear or not clear? So if in any place, for example, expenses at what price to record? Is any accounting standard telling? No. At what price you will record? At historical cost. Appoda and the financial statement is reliable. So when AS is not there, you will follow the framework. So what is framework saying? I have 4 options. In that, what option have you chosen? Historical cost. Appoda your financial statement is having that qualitative characteristics. You cannot choose some other method which makes your financial statement non-reliable. So while choosing any of these 4 methods, you have to ensure that the methods that you choose should make your financial statement reliable. Got it, not got it? Got it, not got it? Okay. A machine was bought at 1 lakh, but today the cost of it is 1.5 lakh. You are recording at 1.5 lakh. Apna, what method are you following? Current cost method. But is this allowed as per AS 10? No. But as record pannang apna, then what method it is? Current cost method. Clear or not clear? Do I need to review this? No. I'm done. Realizable method. Each element of the financial statement are recorded net realizable value. For example, asset are recorded at the amount which can be received by selling them. Today, if I go and sell this in market, how much will I fetch? What will I fetch? That is called as selling value. That is called as realizable value. So when I record any asset, liability, capital, income, expenses at the realizable value, it is called as realizable value basis of measurement. Liabilities will be recorded at the amount required to settle them. Got it, not got it? Morning, we prepared the non-going concern ka balance sheet. The loan was for how much value? 35,000. But since we're doing pre-closure of the loan, I had to pay extra how much? 2,500. So what is my total liability? 37,500. So this is historical cost or NRV? NRV. Because we prepared all the assets and liabilities at realizable value, settlement value. So there, we applied non-going concern. Adhukku endha AS irukku? No AS. So what did we apply there? Framework was applied. What did we apply there? Framework was applied. Got it, not got it? But framework apply பண்ணும்போது, the question came in my mind. This liability should I show at what value? So at what value if I show, my financial statement will be reliable. If I show this at NRV only, my financial statement will be reliable. Got it, not got it? Last is present value. How can I value the asset? Assets are recorded at the present value, today's value of the future net cash flow. Future cash flow was how much? 3 crore plus 3 crore plus 3 crore. How much? Total 9 crore. What is the worth today? 7.5 crore. So this will be the building value. You can take a decision. But AS10 does not allow this. That's a different story. But this option is given by whom? Framework. Who is preventing this option? AS10 is preventing the option. This is one of the another method for valuing the building in my books of accounts. Purida. Got it, not got it? Asset are carried at present value of the future net cash inflow that the items is expected to generate in the normal course of business. So I'm discounting the future cash flows. The process of discounting the future cash flows is called as present value. Got it, not got it? This we studied in 2 places. One, if you're a 12th state board student, in the goodwill topic, state board, this topic was covered. Foundation people, you studied this in 2 places. In Max 1, second is goodwill chapter of partnership. In that, this was discussed properly. Yes or no? Okay. Liabilities are carried at the present value of the future net cash flow that are expected to be required. Okay, this again, liabilities also you can record at the present value of the future net cash outflow. So whatever outflow I'm going to do in next 5 years, that I'll discount now and that value I'll record. Is this correct? Any of this AS will talk about it? No. No AS will suggest this. But this is an option given where? In the framework. If I have to pay 9 crore at the end of 3 years aptina, today you record that at 7.5 crore. Is it practically possible? Not possible. But option is given. Option is given where? In the framework. I'll do one question from ICI. from my CA book. Here it is. Now, carrying amount of machine is 40,000. Carrying amount of machine is 40,000. What is meant by carrying amount? The value of the asset in the books of account. Carrying amount is also called as WDV, also called as book value. In the book, the value of this asset is 40,000. Means what? Historical cost less depreciation. But what method have they followed for recording the asset? Historical cost. Any problem here? No problem. On historical cost, they have depreciated. Whatever method they follow, SLM, WDV, whatever method, I'm not bothered about that. Depreciation has happened on what value? On historical cost only. Always depreciation is calculated on the historical cost. Upon a what measurement method this is? Historical basis. Historical cost basis. The machine is expected to generate 10,000 as net cash inflow. In the machine வந்து நான் future use பண்ணா ஒவ்வொரு வருஷம் every year how much money will I earn? 10,000 rupees. The net realizable value of the machine on the current date is 35,000. So can you please tell me what is historical cost? Historical cost is 40,000, which is carrying after depreciation. After depreciation, as on today, the historical cost is how much? 40,000. What is the realizable value? 35,000. Current cost is not given in this question. Present value we have to calculate. What is the present value? The enterprise requires an earning rate of 10% per year. So this 10% is what? My discount rate. What is it called as? Discount rate. The enterprise can either use this machine to earn 10,000 for 5 years. So how many years I'm going to use this machine to generate income? 5 years. At what interest rate? 10%. Now, can we calculate the present value? Annuity factor is equal to 1 divided by 1.10. How many years you want? 5 years. Equal to how many times then? 5 times. 1 time, 2 time, 3 time, 4 time, 5 time. Then press GT. Then press GT. How much are you getting? 3.7907. So now, discounted cash flow is equal to 10,000 rupees is earning every year. Over version 10,000 I'll earn. And what is the discounted value? 3.7909. Discounted annuity factor is 3.7909. So if I multiply, what will I get? 37,909. 907, okay. Correct? So 37,907 is the worth of the income I will generate in next 5 years. So the worth of the machine should be what? Equal to this. So 37,907. So you tell me, forget there is no AS. AS illa marandrunga. Out of this 4 option, which is the best option? Which is the best option? If I don't want to record a historical cost, what is the best option? This I'm already recording, boss. I want to change which method I can adopt best. If I show the asset at 37,907, will it be right? Will it be right? No. Why it will not be right? Future cash inflow is a big question mark. First point. Second, we want to follow prudence concept. We have to be prudent. Prudent means what? We'll anticipate less benefit in the future. We'll anticipate less benefit in future. We'll record more losses. So either which is more prudent? 35,000 is more prudent. Got it, not got it? Got it, not got it? Can I record my asset at 37,000 rupees at higher rate? No. I'll be more prudent, record more losses and record the asset at a lesser value. Got it, not got it? Now let's read the answer. Present value of the asset is 37,909 we got, no? 37,907 we got. They rounded off this to 37,900. Any problem? No problem. So present value is 37,900. Net selling price is 35,000. Now what are they concluding? Let's understand. The present value of the asset is 37,900, which is also called it as recoverable value. It is obviously not appropriate to carry an asset at a value higher than its recoverable value. You know, recoverable value 35,000. Can you show the value of the asset beyond 35,000? If I go and sell this asset in market, how much will I get? 35,000. Is it right or fair to show more higher value? If you show it, you are not prudent. So to consider prudent in mind, it is better to show at the lesser value. This asset is recorded. So this asset is now it is How much? 40,000. How much it should be, right? No, 35,000. Wait. So current value of the asset is 40,000. If I recorded 37,900 na, asset is overstated by 2,100. 40,000 minus 37,900, how much are you getting? 2,100.
37,900
Sorry?
35 or 37,900 or 2,000.
Why should we take that difference? 35,000 and 37,900 differences? That is not required. See, what we are currently trying to see is that 40,000 is the value of the asset right now. If I show at 37,900, it will be overstated by 2,100. Got it, not got it. But what is the best method to show? If should I show at 37,900 or should I show at 35,000? See, even கொடுக்கிற conclusion, இது வந்து unnecessary because my current value of the asset is 40, historical cost. If I go and sell it, how much will it come to? 35,000. So how much actually is overstated? 5,000 is overstated. இதோட சொல்லி stop பண்ணிருக்கலாம். But what he's comparing 40,000 with 37,900. So if I take this value அப்படின்னா currently 40,000 இருக்கு, but actually how much it should be there? 37,900. So how much it is overstated at present? 2,100. So on one side he's telling that this is not the right value to record, but when giving the difference, he's taking the difference between 40 and 37,900, which is not appropriate, but they've given it's okay. To be very honest, none of this method is applied when it comes to asset because we follow accounting standard 10. But in case if they ask this question appadina, specifically in the context of framework, calculate the present value, calculate the current cost, calculate the realizable value appadina, idhula endha better method best appadina, you have to apply your mind. Like how ASB applied the mind and decided the conclusion, no, like that you have to apply the mind. So here, which is more prudent method, recording the asset at the realizable value is much better if you don't want to record at the historical cost. Got it, not got it? Clear or not clear? Okay. Now, there's one more point that I want to discuss. With that in mind, while applying the framework, the entity should follow the below mentioned process. Analyze the nature of transaction. Analyze the nature of transaction. For example, for this particular transaction, I need help. I need help from you for accounting. So first I have to analyze the nature of transaction. Any problem? No problem. Determine whether it meets the definition of element, such as whether this transaction is asset or liability or equity or income or expense. Okay, not okay. Once you decide this is asset or capital or liability appadina, apply appropriate measurement basis. So why should I apply the measurement basis when AS is there? I am talking about the applicability of framework. When will you apply framework? When accounting standard is not giving any solution. Appona, what is heading here? When accounting standard is absent, approach to accounting in the absence of specific accounting standard. An entity should first refer to the relevant accounting standard to determine the appropriate accounting treatment for a transaction. Correct? For transaction, if I want to know what is the accounting method, I should refer the accounting standard. Pooja, where should I refer? Accounting standard. In case where no specific guidance is available under any accounting standard, the entity may refer to the framework. So when you come to the framework, you should know the step-by-step procedure, no boss. How should I apply it? You should know or not? Yes. So first, analyze the nature of transaction. What type of transaction this is? Example, the transaction is cryptocurrency. Regarding cryptocurrencies, is there any AS which is giving us guidance? No. Got it, not got it? Okay. So cryptocurrency வந்து nature analyze பண்ணிட்டீங்க. Second, what is the type of the element? What element it is? Whether it is asset, liability, equity, income, expense. Analyze the nature of the element. Then apply the appropriate measurement basis. So for recording cryptocurrencies, how many measurement bases we have? 4 measurement bases. Either I can record the cryptocurrency at historical cost or current cost or realizable value or at present value. Whatever method you choose, ensure that it is not compromising the qualitative characteristics of the financial statement. Apana, you have to choose that method which will uphold the qualitative characteristics of the financial statement. If I show, for example, cryptocurrencies at a historical cost, if I show at historical cost, if the quality maintains appadina, should show at historical cost. But you said, no, I'll show at present value appadina, it may not be satisfying qualitative criteria. அப்ப என்ன சொல்ல வரான், நீ என்ன மெஷர்மெண்ட் பேசிஸ் வேணா சூஸ் பண்ணு, யூ சூஸ் வாட் எவர் மெஷர்மெண்ட் பேஸ் யூ வாண்ட், but that base of measurement should ensure that the financial statement ka qualitative characteristic is not compromised. Ensure that the resulting accounting treatment satisfies the qualitative characteristics of financial statement. Whatever solution you gave, no, that should ensure that the financial statement is understandable, relevant, reliable, and comparable. These 4 characteristics should not be compromised. Got it? Not got it? So the accounting standard that is framed, no, that is framed keeping the qualitative characteristics in the mind. Upon the end, ASum patina is not sacrificing the quality of the financial statement. Now for this problem, AS is not there. So you have to give your own accounting treatment. Who are you? Entity. Own accounting treatment need decide panno. Edhu vechittu framework based pan. So when you're choosing this measurement basis, ensure that the end result is not sacrificing the qualitative characteristics of the financial statement. So this is the complete step-by-step procedure to be applied in the absence of guidance from the accounting standard. Got it? Not got it? With this, we're done with the chapter. If you permit, maybe we can discuss very quickly MCQ if you want. Or when we do revision in the next class, I can discuss that time also. What do you want to do? Wonderful. Not one person is saying, yes, sir, we'll do it today. See, whether you're listening to class, not listening to class, is it going to affect me? My paisa has come, no. Is it going to affect me? No. Whom it is going to affect? You, because you are writing exam. If question is coming from this chapter, and when I was explaining this concept, you were sleeping up, Dina, who will not be able to perform in the exam? You. Who is the loser? You. So should I be really concerned? I'll have concern because you're my student. You guys are my baby. So I'll be concerned. But if this baby is adamant that he'll sleep in the class, Abdina, what will I do with that? Nothing I can do. No, I'm not talking about this baby only. I'm talking multiple babies sleeping in the class for last half an hour, 40 minutes. I can name also one by one. If you come and sit from here and see, no, each and every person's face clearly visible. Who is sleeping, who is not sleeping, who is listening, who is not listening. Pakka detail, with detail I can give you. How many times people got zoned out also, everything I registered. You come and sit here, everything is visible. I'm telling you. Hello, no problem. We'll do a quick revision in the next class. In that revision, I'll complete the MCQs also. Okay. Okay. Now listen to me very carefully. I'll be sharing the scanner with all of you. 20 plus questions are there, nearly about 25 questions. Each one of you take the responsibility of solving 1 or 2 questions. Let's say 2 questions. I want 10 people, or let's say 12 people. Each of you solve 2 questions. By tomorrow and tell me if that is okay or not okay. If that is okay, no mistake in that aptina, we will give the book for printing. So next week end kulla, your chapter 1, chapter 2, chapter 3, and with a couple of more ASS will come printed in one single book. Is that okay with all of you? So 10 people, I should select or you will select by yourself? Okay, give me 10 volunteers in the group who are willing to take up this job of doing 2 questions. Okay, in group you tell me. Sharia, is that okay? Chalo. On that positive note, I'm summing up the session here, people. That's all from my side for this session. I'll see you on the next class, which is on Thursday evening, 5 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you.